Whether you're seeing me on the live, or if you're seeing this through a on demand video on demand just on YouTube, or you're seeing it on social, however you're coming across this, thank you so much for tuning in. I want to jump in and talk about the real estate market here in Middle Tennessee. What are we seeing so far in Q1 in 2026? Today it's March 18th, right? And that's typically the time of year when the selling season really starts to just kick off and pick up. Like I've always said, mid-March through mid-June, like that's that sweet spot. If you're looking to sell a home and your timeline's flexible, like the sweet spot is right in there. It's when buyer activity starts to pick up. But at the same time, the market doesn't just start in mid-March. The market has been leading up to right now over the last few months, and I think it's worth it to just take a look and see what's happening in the real estate market right now, so we can maybe forecast what's going to happen here in 2026 for the Middle Tennessee real estate market. So without further ado, let me go ahead and share my screen with y'all so you can see what it is we are looking at here. There we go. And so we're going to talk a little bit about the state of the Middle Tennessee real estate market. Y'all obviously have my information, but if you don't know me, maybe you stumbled across this again on a live, or just found it on YouTube for however you were searching for information. My name is Rob Foglia. I'm a real estate broker. I'm with Keller Realty. You see all my contact information here on the screen. I have been in business since 2013. I'm a licensed broker. I'm happy to lend a hand and help you with whatever real estate questions that you have. I want to help inform the public as to what's happening in the real estate market, because the reality is a lot of people will paint a picture of what's happening in the real estate market, and I think we should just paint the picture with data, so to speak. So let's see what we're looking at. The big picture, what's happening across Middle Tennessee right now. Right now, rates have been around 6% for the last little bit, per Freddie Mac. We'll get into it here in a second. But rates are at basically a 3-year low right now. At the same time, even though rates are at a 3-year low, we're at about 5 average months of supply. Now, for those that aren't familiar with it, months of supply is kind of a stat that helps measure demand. Like if you just think about basic economics, you've got supply, you've got demand. Well, we know supply, right? We know how many homes are out there for sale, but no one has any idea of how many buyers are actually out there for sale, or buyers for sale. How many buyers are out there shopping for homes is what I meant to say. Like no one has any idea of how many buyers are actually out there shopping for homes right now. And not just right now, but at any time, because there's no buyer database, right? Nobody knows how many buyers are out there. And so we use months of supply as a way of saying, based on recent activity, based on how quickly homes have been selling, that we have basically 5 months of homes out there. 5 months is encroaching on balanced market territory. 5 to 7 historically has been balanced, and more than 7 is considered a buyer's market. Less than 5 is a seller's market, and the further you stray from that balanced market is how extreme that the market is. Now, we are seeing fewer new listings hit the market as well. We're going to touch on that because I think that's a pretty big story of what's out there in the economy right now, in the real estate economy. But in Davidson County for February, there were 25% fewer new listings. I think there are still a lot of sellers who are out there and they're hesitant to hit the market for whatever reason. I think they're a little hesitant right now, and that's not a bad thing. It just means that if you're a seller, you might have an opportunity to kind of corner the market, so to speak, corner the buyer market and the buying public, and be one of the options that are out there, one of the options that sells if you price correctly. But let's look at inventory by county. I think that's an important thing to take a look at and pay attention to here. Now, this right here is active inventory and months of supply, comparing February of this year to February of last year. We already defined months of supply, but an active inventory, pretty straightforward, right? How many homes are actually out there for sale? Now, in Davidson County, so Nashville's county, the biggest county here in our area in terms of volume, comparing the years, you can see up 3%, 2,200 homes, very similar. 3% to me is kind of when it comes to these types of numbers and we're looking at a month to month, to me, that's pretty flat. I want to see a double digit difference to really be thinking, hey, there's a change here. Now, months of supply, 5 months last year, 5.3 this year. Again, and going more, heavily into that balanced market, territory, and especially when you accompany that with what we're seeing in a couple of other counties, it's showing that the market might be changing here. Active inventory for Williamson County up 15%. To me, that might be reflective of the luxury market not necessarily moving as quickly as it was. When rates were lower, we hadn't really seen prices drop, despite the fact that rates are twice what they were 4 or 5 years ago. Now, months of supply comparing this year to last year, Williamson County, it's up pretty substantially. I mean, almost 1 month of supply. That's roughly 3/4 of a month of supply. Pretty big jump, especially as we are seeing that trend line. Rutherford County, inventory is up compared to 25, up 8%. Months of supply is basically flat. So that tells me that, Rutherford County, a little bit more affordable than Davidson, a little bit more affordable than Williamson. Affordable homes are moving, especially when they're priced correctly. Now, here's one that I found extremely interesting, and that's Wilson County. So Wilson County, Mount Juliet, Lebanon, kind of similar to Rutherford in terms of the demographics, in terms of just the buyers that are out there, and yet it's up substantially, 24% year over year. Months of supply up from 4 months to almost 6 months. That is a pretty substantial jump for both of those. Now, I'll be keeping my eye on Wilson here as we see the stats for March come up here in a couple of weeks. See if maybe it's self-corrected a little bit, especially when we're talking about even a county, but a zip code, a city. What happens is sometimes there's these little aberrations in the data. So I'll be curious to see when I see that big of a jump, if it's just a little hiccup in the data or if that trend continues. Because if I look next month and Wilson County's at 6 months of supply still, well, that's showing me that our market's changing pretty, basically right before our eyes. Now, the other county I pulled up here, it's Middle Tennessee. It's a little further out, but I've got clients that are in Montgomery County. I've got clients. I actually own rental property in Montgomery County, in Clarksville. I've got clients that do. So I do a little bit of business up there, and so wanting to take a look at Montgomery County, we can see down active inventories down 4% year over year. Months of supply down a little bit. Again, to me, that's relatively flat, similar to Davidson. It's the second most amount of inventory, and the fact that that's flat, Davidson's flat, which is the most amount of inventory, that's actually, I think, a relatively good sign, and I'm hopeful that the jumps that we're seeing in both Williamson and Wilson are just kind of slight hiccups in the market, so to speak. Pricing tiers. Biggest thing I want to point out here when we're comparing this year and last year, last year the darker line here. This year is that lighter green that's on the that's in here. The biggest thing I just want to point out is that even though we're seeing what we just looked at right here, right, inventory being up a little bit in some counties, at the very least being flat, it's not dropping. So supply has not gone down in that supply and demand equilibrium there that we talked about. Months of supply has mostly gone up across the board, kind of flat in a couple of counties. And yet, despite that, 4 of the 5 counties here that we have gone up a little bit in price. And, with Williamson being the biggest jump, going up 7%. Wilson's an outlier, dipping 1%. That's number 4 there on the graph. Now, at the same time, a 1% drop is basically flat. Just like I mentioned before, that's a small dip. Typically, pricing goes up historically about 3 to 4% every year. It kind of just keeps up with inflation. Now, that doesn't mean every year it does that, because that's an average. And some years it goes up 10% seemingly. Some of those, like the COVID year, or year coming out of COVID, I guess it was. I think there were some months that I pulled it up and literally we saw 20% increases. Now that's abnormal. The average is normally 3 to 4%. Seeing these slight differences, despite the fact that we're seeing inventory rise or stay at least flat, it's telling me that we shouldn't see prices, knock on wood, be going down really anytime soon. I'd be surprised if they did, just because inventory has not started creeping up to the levels that needs to happen in order for prices to go down. Now, but this right here is to me one of the more I don't want to say concerning, but the biggest thing that I think people get confused about. we're talking right here about days on the market. Days on the market is just as it sounds, how long it takes a home once it hits the market to go under contract, right? And so we're talking about the average days from listing to contract when a home goes live as listing. Like, so when we start showing it, the signs in the yard, buyers can get out there and take a look. The average days from list to contract, February 25 to February 26, right here, up across the board. Davidson up 29% compared to last year. Every county is taking longer to go under contract. Wilson County, we just talked about the jumps that we're seeing in Wilson County, up 36% compared to last year. What this is telling me, and this is probably the biggest thing that's being hidden inside the numbers for sellers to know, is that buyers are being picky right now. They just are. So when I'm seeing, I guess it's normal to see this number be high in luxury price points. If I only saw Davidson and Williamson, the two highest price points here, if I only saw those two with high numbers, and Rutherford was still, was a month on average, or even 40 days on average, I'd be thinking, okay, well, that's just a luxury price point issue in terms of homes sitting for a little bit longer. But the reality is, even when I'm seeing Montgomery County here at 69 days, up 11%, every county's taking longer to go under contract. These are huge jumps. Homes are not flying off the shelves like they were. And honestly, pricing just matters more than ever in this market. This is where agents get it wrong a lot of times. Real estate agents, a lot of times, just kind of put the home up there for sale, and they maybe talk with their client. What does their client need to get or want to get? And they put the home up at that price. And that's not how this works. A good agent, a skilled agent, a broker like myself, we list the home based on the market data. We price it based on what it should be selling for. So that way we're outperforming these numbers. But at the same time, when this is a market average, and when we're seeing this across the board, when we're seeing 2.5 months on average for Davidson to go pending, that's telling me that the market is definitely slowing. This I still think is a big part of it. Now, again, rates are near 3-year lows right now at being roughly 6%. And yet, and again, these numbers, by the way, are straight from Freddie Mac. They update every Thursday. So tomorrow there'll be new numbers. But when I pulled them last week, 6.11% was the number from Freddie Mac. They're down. Roughly down 0.5% compared to this time last year. 2 years ago, they were close to 7%. So this is a good trend for consumers. It's good for sellers because it helps make your home seemingly more affordable to buyers. It helps lighten, the monthly budget for a buyer as well. This does impact demand. New contracts were up in 3 of the 5 counties that we're pulling the data from. 3% in Montgomery, 11 in Rutherford, and 10% in Wilson County. New contracts, though, down in both Davidson and Williamson. But the reality is buyers have more purchasing power, but they're being selective. That's just what it comes down to. Again, buyers have more purchasing power when rates drop, but they're being selective because there are options out there. Again, I just want to emphasize that's why it matters in terms of who you work with, who your broker is, and that broker needs to price the property correctly. Help you figure out a number that's going to cause the property to sell and not just sit on the market for months and months and months and months. I wanted to spotlight one particular county before we kind of open it up for questions and go from there. Davidson County, obviously Nashville's county. It's the county that's kind of obviously the central hub of Middle Tennessee, right? Every county, from that we talked about basically surrounds it. All 3 interstates funnel right through downtown Nashville. Thanks, city planners, by the way, for that. But no, I'm kidding, of course. But no, Davidson County, that's the central hub of Middle Tennessee, right? And so let's take a look at the numbers and really see what's been happening. Active inventory, again, pretty flat. But months of supply up about 8%. So a little less than 10%. But when I see that type of jump and inventory is kind of flat, that tells me demand is softening. Closings down 7% compared to last year. Again, 7% might not be the biggest change, but when we see that routinely, that's a pretty substantial change. Median price, though, has still gone up. It's up 2% over this time last year. Um, I'm going to talk about the difference between median and average here in a moment because I've gotten that question offline here recently. People are hearing stats, so we're going to talk about that. So if you've got that question, I will get to it in just a moment. But up 2% year over year, again, that's relatively flat. It's not down. And when I'm seeing the rest of these things be down, less closings, more months of supply, a little bit more inventory, longer time on market, longer list to close as well, but price hasn't gone down. To me, that's saying unless something really drastic happens, unless rates start to skyrocket, unless just a ton of new inventory hits the market, which we're talking about active inventory here, but new listings are kind of down right now. Well, unless more inventory just starts piling onto the market or rates jump up, I don't see median price and average price just I don't see that dropping. It's just the reality of it. I don't see it changing to to what consumers might want in terms of affordability. There is a lot though here that's showing a shift toward potentially a buyer's market. It's honestly the biggest. All these things, all three, or excuse me, all five. Gosh, easy for me to say today. All five of these stats that you see that are in red here on your screen. Well, all of these are pointing toward there potentially being a buyer's market here in the near future. But again, we won't know that. And a buyer's market, by the way, does not mean that prices drop. A buyer's market just means there are more buyers out there than sellers. So that means that buyers have just a little bit more leverage. And with that 5.38 months of supply, that's solidly getting into balanced market territory. If that climbs even just a little bit more, that's buyer market territory. That's where buyers have more leverage. They have more pull over a seller than really we've seen in any time in recent memory. I mean, it's been close to 15 years since we saw a true buyer's market here in Middle Tennessee. Maybe we're coming across that again soon. What I'm watching for this spring, just want to go through this with y'all real quick because I think spring inventory surge is going to test the prices. So, inventory tends to always rise this time of year. It just does, right? Inventory goes up when March, April, May hit. That's when a lot of people decide to hit the market and start selling. New listings, which I'll show you in a couple spotlight cases here in a second, are down across the board. Historically, these months bring a wave of new inventory. So if new listings continue to hit and buyers are still just kind of picky and waiting and not doing anything, well, I think that could be the tipping point we're looking for in terms of really leaning into a buyer's market. I'll see what happens to prices then when that happens. I'm always hesitant to speculate in terms of what the numbers are going to do because no one knows the future. And it ultimately comes down to a seller. It ultimately comes down to sellers saying, "Hey, I need to move. I need to drop the price." But I think there's going to be a lot of homeowners that are out there that'll stay put. The second thing I'm watching for, rate-sensitive buyers re-entering the market. So at 6% or just a little bit above it right now, we're near 3-year lows. Every quarter of a point that it drops, it unlocks more purchasing power. If rates dip into the 5, I would expect a noticeably, if rates dip into the 5s, I'd expect a noticeable uptick in contract activity, particularly in that kind of 350 to 550 range. The kind of quote unquote more affordable housing for our area when you're talking about the suburbs, talking about Murfreesboro, Lebanon, Clarksville even, I would just expect to see more buyers enter the market if rates drop. Now, the third thing I'm watching for this spring is that pricing strategy really becomes a differentiator in this market. With days on the market climbing in every county, overpriced homes are sitting. The data is showing that correctly priced homes are still moving, but there's zero room for aspirational pricing right now. That just simply means if you own a home and say it's worth $500,000, like that's what the comps point to, and you're like, well, I really love the kitchen renovation we did, and we've done so much to this home. I want to get $525 for it. You might think $525 compared to $500, like that's a 5% difference. You might think that's not the end of the world, and worst case scenario, it just sits for a little bit longer. Well, no. Worst case scenario is it just sits forever when you miss the mark in terms of pricing in this market. Again, pricing strategy is the differentiator. That's why working with an agent like myself, that matters. What all this just means for you, if you're thinking about selling your home here anytime soon, know that prices are still up in most counties, but momentum is slowing. Again, we're really in that balanced market territory. And when that's the case, we don't know how long that balance is going to stay or if it's going to tip into the buy side. Momentum is slowing, and days on the market, they're climbing fast. You'll wait longer than you will this last year, meaning like you're going to wait for that buyer than you're going to wait longer, for that buyer than you would have this time last year is what I'm trying to say. Pricing right from day one is critical. Overpricing is going to cost you time and money. And spring is still the best window. Most buyers are out there and start being active in March. March through June is that sweet spot. And so spring is the best window for you. You've got to take action now if you're thinking about it. Now, if you're thinking about buying, know that rates are really near, I guess I'll call it, rates are near 3-year lows. Your purchasing power is better now than it's been since 2022. More inventory means you've got more options, more leverage out there in terms of what you can accomplish over a seller. Sellers, they are negotiating concessions, price reductions. They're back on the table. I'm seeing it pretty normally. A lot of sellers agreeing to pay some closing costs. Don't wait for rates to drop further, because if they do, your competition is going to kick up, and we don't know if rates are going to drop further. I pointed out that last Thursday it read 6.11% on the Freddie Mac website. Well, 2 weeks prior it was around 6%, and so it's up 0.1%. Which isn't the biggest number, but every little bit matters. For every 1% rates change, that impacts your buying power by 10%. So meaning if rates dropped from 6% to 5%, that home you're looking at is 10% more affordable. But it's not only more affordable for you, it's more affordable for the competition out there too. So you don't want to wait for rates to drop further. If y'all have a question about your specific neighborhood, I'm going to open it up to Q&A. But if you've got a question about your specific neighborhood and you want me to run the numbers for your specific area, for your specific situation that you're in, I'll pull the data. I'll walk you through it. No pitch, just the numbers. Happy to talk with you. Just reach out to me. My information is here on the screen. Happy to help you however I can. And let's go through here and let's look at some market stats real quick. Because that's actually going to be a good segue to my first question. And so one question that I got recently had to do with a difference between the average sales price and the median sales price for just for an area, right? And so like this particular person had asked me about Davidson County, and they had said, because I'd sent them the info, and they had said, well, that's not what I saw online. I saw something different online. And the fact of the matter is that a lot of times these two stats get pretty misconstrued or just tangled up, because sometimes it's just a lack of understanding of what sales price or an average sales price or a median sales price means. Some agents don't even know what it means, sadly. Well, I'm going to explain it to you real quick. So your average sales price is just that. It's an average. So for instance, in February, there were 509 closings in Davidson County. So if you took the sales price for all 509 of those homes that sold and you divide it by 509, the number you get is 734,406. Now that's different from the median, because that average is again, it's the average of all 509 homes, right? It's just as I just mentioned, you add up the prices, you divide by 509, that gets you your average. Median's different. Median, it's like if you had 509 homes that sold and you listed them from the highest price to the lowest price, right? So from the multi-million-dollar Belmead home that sold, and put that up top, and at the very bottom, you put the least expensive condo or home that sold here in Davidson County in February. You put that at the very bottom, and you list them all in order. So from number 1 at the top to number 509 at the bottom, and you find the absolute middle of that list. So somewhere right around 250. It's just trying to do the math in my head. I believe it's number 255 on that list. Well, that middle number, and again, these are in order. So that middle number, number 255, is the median. And for instance, in Davidson County last month, the median is 520. Now, that's a pretty big difference. You can see it's a $200,000 difference between average and median. And you see that for a market like a Davidson County where there's just a wide variety of real estate that sells. When you're talking about, the Belmead mansions and then the 2-bedroom townhouse in a neighborhood that's 50 years old and selling for, $200,000. Well, that's a huge just jump in value between those two properties. And so that's why when you have as much data as we're talking about, you see that gap. You typically don't see that as big of a gap when you're looking in a smaller pocket. Since we're talking about Davidson, let's pull up a zip code in Davidson. I'm going to pull up Antioch to start. So 37013, and you can see right here, this is just pulling up Antioch. There were 40 closings in February of this year. The average sales price, $428,625. The median sales price, $429,468. So basically the same, within $1,000 of each other. The whole reason I point this out is that Antioch does not have that wide variety. Yes, you have single family homes, you have townhomes, but that zip code is going to have the same overall style of homes. You don't see, a multi-million-dollar mansion versus, the least, the lower priced properties. You could say the same thing about Belmead. Gosh, I should have pulled it beforehand. I believe it's 025. Gosh, I believe it's 37205 for Belmead since we're talking about it. Yeah, there we go. And you can see the same thing, that the average sales price, and this is for 18 closings, the average sales price, $2.7 million. The median, $2.5 million. So yeah, it's a $200,000 difference, but that's, less than 10% of a difference right there. And so you can see that's why there's such a range when we look at, say, a Davidson County. You tend to see a little bit, I'll pull up Rutherford as another good example for us real quick. Rutherford. So you can see a difference again in sales price and the average sales price and the median, because you've got a sample size of 323 closings. It's not a sample size of 40 homes like we saw in Antioch or 18 for Belmead. But if we were to say let's pull a zip in Murfreesboro, 37128. You can see it's still 58 closings, and you can see actually a pretty good gap right there. Let's take a city. Let's take Laverne. Let's see, 37086. See, that's getting a lot closer. There's only 29 closings. It's a smaller market than the entire county. And you can see there the average sales price 340, median 330. So very similar numbers that just connect better than a county average and a county median. So anyway, I think that's important to talk about the distinction there and the difference right there. I did get a couple of questions offline aside from this one that I wanted to make sure to address, and I kind of answered this one already, but I want to make sure just to really spotlight it, I guess you could say. Is now a good time to buy, or should I wait for rates to drop more? Now, nobody knows what rates are going to do. That's just the fact of the matter, right? I mean, like, if anybody who says they know what rates are going to do is telling you that they do, they're lying to you. And the reason I can say that is there were so many people who said back in when rates started to go up about 3 or 4 years ago, they said, marry the house and date the rate, right? I could not stand that. I was not one of the people saying that, by the way, right? But they were screaming, marry the house and date the rate, because they were trying to get your sale. And they were telling you, oh, when rates drop, you can refinance. And while that's true, like if you're not happy with a 6% rate, yes, if rates drop, you can refinance, but we don't know if rates will ever drop again. In fact, I think it's worth pulling up some data and really showing you exactly what I mean by that. And so this right here, this is the Freddie Mac website. And, we're looking at the mortgage rates, the historical mortgage rates. Again, 6.11 is what we saw. And I don't want to look at 1 year. I want to look at like a 10-year change. Now, The 10-year change, this shows the absolute lowest they were when they were in the high twos here in 21, the end of 21. Then when they started to rise here into the threes in 22, and then really by the end of 22 when they were at 7%, which is, I mean, look at that change, by the way, in 1 year. 7% in November of 22, and in September of 21, so in 14 months, they went up basically 3 times because it was 2.8%, which is just insane of a jump. But anyway, I'm rambling about that. My reason for saying this is that there were lenders, I heard them saying it. There were realtors out there too saying it, that they were like, hey, 7%. Marry the house, date the rate. When rates drop, they'll, it'll make sense to refinance. So some people did. Some people said, all right, fine, I'll buy with a 7% rate and I'll refinance when it's 4% or 5% again. Well, did it ever get to 4 or 5 again? I don't see it getting to 4 or 5 anywhere in here. Even a 15-year, which is completely different animal because you're looking at a higher payment at that point. You're at 5%. That's the lowest we've seen. 5.15, I should say. It was still 6.09 for a 30-year. And so my point being, and I guess all I'm trying to get at here, you've got to answer the question of whether or not it's a good time to buy yourself. So meaning, like, it's got to make sense for your life. Whatever your payment's going to look like, make sure that makes sense from a budgetary standpoint. Make sure you can afford it. And just make sure that you want to take on owning a home. You want to be in that home for a little while, because buying a house is not a short-term commitment. It's not like getting a 6-month or a 12-month lease at an apartment or anywhere. Buying a house is a long-term commitment. So make sure if you are deciding to buy that it makes sense for you long-term and that you can afford it. That's best I can say. A couple other questions that I got offline here real quick. Are sellers still getting multiple offers? It's a great question. It's rare. Occasionally we see it, but it's really only happening when a property is underpriced by a substantial amount, and it kind of gets lucky, if that makes sense. So when you look at a piece of property and you see a home listed for sale, and they just say it should be listed at $500,000 and they listed at $480,000, they absolutely could get 2-3 offers in that first couple of days, and that could drive the price up to $500,000. It's a little bit abnormal based on the amount of activity we're seeing right now, though, to see it really outperform the $500,000. And sometimes if they list at $480,000, they don't even get to $500,000. Now, granted, maybe the home wasn't worth $500,000 then to begin with. It's, what's something worth? It's worth what somebody will buy it for and what somebody will sell it for. That's the value of any asset. It could be a home. It could be a guitar. It's any of those things. It's something is worth what somebody will pay for it, and something is worth what somebody will sell it for. And yet I'm rambling about this. And yet I'm just trying to say that in this market, it's pretty rare to see multiple offers. It happens occasionally, but it's not the norm. We're not typically seeing homes go for above asking price. One or two more, and we'll get out of here. And let's see. What should a first-time buyer expect in this market? So what should a first-time buyer expect in this market? It's a great question. So a first-time buyer needs to, again, make sure that everything is affordable for them, that the numbers make sense, that whatever they're buying is going to make sense for their budget, and that they feel good about the numbers. Secondly, though, a first-time buyer is actually going to be in a little bit better of a position than they were a few years back. When we were talking about rates being 3% and there was so much buyer activity back then, well, because there was so much buyer activity, there was so much competition, and those first-time buyers that were buying that $300,000 home, well, there wasn't just one offer, there were 10 offers. It wasn't just that height of the market in 22 that produced multiple offers. Gosh, I was dealing with multiple offers in 2018, in 2017 as well. It just was what it was. That's just how the market worked. You're not really seeing that anymore. So because of that, first-time buyers can actually, get a piece of property that makes sense for them. The only hiccup with that is that it depends on their budget. A lot of first time buyers might have a limited down payment. Their down payment might not be coming from the sale of a home because they're a first time buyer, right? And so because of that, they might not be able to afford as much as they might want because prices have gone up and they haven't gone down like you would want them to see, like we would want to see them, right? Last question. If I, this is a loaded question. This is a good question though. The question is, if I bought at a lower rate, does it make sense to move? It's a loaded question, like I said, because it really depends on what you need out of your life. When I first got in the business in 2013, and for my first probably 5 to 7 years, I helped a lot of people with kind of like auxiliary moves, ancillary moves, whatever the right word is, but like extra moves, a move that was optional. That's the word I was looking for. I helped a lot of people with optional moves. And so moves where it was like, yeah, I like my home, I like my neighborhood, but I wouldn't mind getting, a place that also had a bonus room, so we've got room for the kids to play, or I wouldn't mind getting a home with a basement, so I could have a music studio down there, something along those lines. So that's that optional move that I'm talking about. And because rates were so stable back then, well, even if they jumped from 3.5 to 4.5, most people were okay with it because the numbers made sense. And when it came to housing prices, so, it was that, that move made sense. Now, what I'm thinking is for most people that are making that optional move, it kind of doesn't make sense. As much as I'd love to say, yeah, list your home with me, let's make it happen. Gosh, it has to make sense for you financially. If you're going to take a house payment where maybe you're paying $1,500 a month and you're going to move just to get that bonus room and it's going to cost you $2,800 a month, is that bonus room worth $1,300 a month to you? Maybe it is. It's your house. It's your money. It's your budget, right? But I think for a lot of people, it doesn't make sense, and that's where the trouble comes in for some people who are trying to navigate those moves. I know there've been jokes I've seen online over the last couple of years, like the ultimate flex is having a 3% rate right now, or I've got a 3% rate. I'm going to die in that house type of thing. I'm going to be there forever, and I get it. I've got a rate in the low threes in my home. I don't plan to move anytime soon because of that. We love our home as well, but it just doesn't make sense financially to sell for those optional reasons. Now, if your life is changing, absolutely make that move. Don't hold on to it just because you've got a low rate. I talked to a client here recently who is wanting to get something new. He wants they want to get something new for their family in a little bit better of a school system than where they are now, and I'll leave it at that. But they've got an excellent rate on their home right now, and they don't want to sell it. They want to rent it out, which is fine if that's what they want to do and they can afford it. And yet, I think people need to understand that it's got to make sense for your budget. Not every house makes sense as a rental. These clients that I'm thinking about right now, that maybe their current place makes sense for them as a rental. Maybe they want to be landlords, and there's nothing wrong with that if that's the case. But there's a lot of people that are out there that I've helped over the years that the house that they own is not a good rental property, and it wouldn't cash flow well. In those instances, just because you have a 3% rate and you need to move, don't back into an accidental rental if the numbers don't work. Instead exit from that accidental rental gracefully and say, hey, let's buy that next house. Let's take on that next endeavor. Y'all, I trust this has been worthwhile. I appreciate everybody for tuning in today. We got a good 40-minute live here, so I'm going to cut it off. But if you enjoyed this, if you got good value from this, if it was educational, if it just made sense, if you want to see more of these, let me know. I'm hopeful to do about one of these a quarter, but who knows? Maybe if they make sense and it's well received, we'll do more like one a month. We'll see what we come up with here. But anyway, I appreciate y'all. If you need anything, you've seen my information multiple times. But again, my name's Rob Foglia. I'm a broker with Keller Williams Realty. You can email me, rob@realestatereset.org. You can text me, 615-238-7823. You can text me at 615-238-7578. And if you want to reach my office, 615-895-8000. Appreciate y'all so much. We'll talk soon.